What's up everybody? Nate here. So the World Bank just put out a massive report on the future of our entire world economy, and it's not looking good. They essentially said that the entire global economy is going to face a massive recession caused by stagflation in 2022 or in 2023. And there is definitely a case to be made for why a global recession is coming sometime soon. We have inflation that is at an over 40-year high, along with supply chain issues that are not only making inflation worse, but keeping Americans and individuals all throughout the world unable to purchase things. Not only that, but this inflation problem is only making the wealth gap between countries and people a whole lot worse. Individuals are becoming poorer, nations are becoming a whole lot poorer, and some of them are starting to default on their debt. Like Sri Lanka actually defaulted on its debt just a few weeks ago. That affects just about everything, and people are starting to wonder if this global recession problem is going to hit the United States. Well, today I want to kind of steer clear of the doom and gloom and actually give you some positive reasons why the United States and possibly the rest of the world might not reach a massive recession like the World Bank thinks. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now one of the biggest reasons why the World Bank thinks that we're going to have a global recession is because of 1970s style stagflation. Now what you need to know about stagflation is when your economy starts going way down, but inflation starts to go way up. We have seen this over the last 2 years, as in Q1 2022, our economic GDP actually shrank. Now, by definition, it takes 2 quarters of economic decline to actually say that a country is in a recession. But with this initial GDP report coming out and having such a strong 2021, investors and experts are starting to get worried. Now, what happened in the United States in the 1970s was stagflation. Americans had a lot of money, but they weren't able to purchase the goods and services that they needed, particularly oil. I mean, during this time, we had massive oil embargoes from Saudi Arabia and other Middle Eastern countries. The price of oil and gas went up all throughout the country, and it was hard to come by. And obviously, you can see the parallels with 2022. Gas prices in the United States are much higher than they have been in well over a decade, and the price per barrel of oil is only going up. Stagflation has been a concern for Americans and investors for a long time in the United States too. Ever since the pandemic started, we have had these really bad supply chain issues. At first, it was because everything was closed down, but then the problem only continued to get worse because of the Great Resignation and now inflation in general. Businesses are having a really hard time getting all of the resources that they need in order to stock shelves, and that is making it so Americans, even though they have all this money from stimulus or from switching jobs or from investments, they just simply can't buy the things that they need. That is leading into businesses having really bad earnings reports, which is only making the stock market issue of crashing even worse. That has slightly improved, and businesses have started to do everything that they can to get more things on the shelves, but it's still been really difficult. We are having lockdowns in China right now and even bigger supply chain issues from the war between Russia and Ukraine. All of those resources that Russia has and all of the merchandise that China puts out, well, that simply can't get to the United States. Companies are now having to do whatever they can to produce more here at home, which is leading to additional costs. Or if they can't do that, then they're just stuck with what they've got, which means Americans can't buy things. Part of the reason why we saw lower GDP in Q1 of 2022 was because businesses were increasing their inventory. They were taking on a lot of additional costs, even though inflation is so high that they were buying all of these things to stock shelves. Well, they actually made quite a bit of an error when they were ordering things. When they bought all of their goods and services, they were buying things that people wanted during the pandemic. Target and Walmart both are suffering right now because they bought a lot of consumer electronics, things that people were using during the pandemic, apparel and clothing that people were wearing during the pandemic. Now that it's summer 2022 and people are going out again and traveling, well, businesses have not bought the things that consumers want right now, and they have shelves that are stocked, but nobody is buying anything. That still leads into a stagflation problem. Target actually admitted that they purchased way too many TVs, and that created an issue for Americans because they don't want that stuff. Meanwhile, the prices in industries that Americans want to partake in right now, like the vacation and travel industries, are going way up, which is causing Americans to do a lot less of those things. Some studies have come out that some Americans are just not going to take a faraway vacation this year, or they're going to take a lot shorter of a vacation because they simply can't afford to stay out that long. And many of them are just planning on taking a staycation, which there's nothing wrong with that either. But the argument from the World Bank here is that you're going to have an economy that shrinks. Businesses can't grow in this environment because, one, they're getting a lot less liquidity from the stock market as investors are trying to move their money in and out to protect themselves from a crash. And two, they're not getting any money from consumers because there's nothing for consumers to buy. And the things that they can buy, they either don't want or they cost way too much in 2022. Businesses are either going to have to downsize or lay people off, and we have seen that in 2022 from a lot of the major tech giants. Or they might not even survive 2022 or 2023. They even can't take on as much debt because the Federal Reserve is raising their interest rates really aggressively right now to bring down demand in our economy and bring down inflation, more importantly. So if businesses aren't growing, then people aren't going to be able to get as much money either, which kind of creates a bigger problem because now you have lowering consumer spending. That is the argument from the World Bank, that this is going to affect every single country in a similar way, and you're going to have a global recession. Not as much consumer spending, not as much business growth, so money is just not circulating around like it was in the latter parts of 2020 and in 2021. But I said I wanted to focus on the good news today, so here is actually the good news out of all of that. We are actually seeing consumer spending stay pretty stable in our economy right now. So how we know that is because of credit card debt and other debt continuing to rise in the United States. Now, there are two major reasons why credit card debt might be rising. For one, Americans had a standard of living that they wanted to keep up with that they found in 2020 and in 2021 that they want to continue in 2022. Obviously, there was a lot of stimulus and people paid down their credit cards over the last 2 years, but now they're starting to fill them back up with things that they want or things that they need. Because inflation is so high and because people need things but they can't afford them with their day job, well, they're turning to a credit card. But overall, that shows businesses and investors that people are still willing to go out and spend that money. They're not foregoing things, they actually still want things. And then the second is we're actually seeing credit card application rates start to rise for what I assume is a similar reason. But overall, what that means is Americans are willing to take on debt. We're still seeing a ton of money pour into the stock market, so people have a lot of money that they want to spend right now. The other good news is while we initially had a problem from retailers like Target and Walmart ordering a lot of the wrong things, well, they need to make those things disappear, and the quickest way to do that is to put them on sale. This could lead to a huge buying spree from Americans this summer. They go out and buy all of those consumer electronics, they go out and buy all of that apparel and clothing because all of that is on sale, and Americans at the end of the day want to have things. So Americans are going to go out and spend, and they're going to get rid of all of this merchandise and all of this excess of supply that these businesses have overstocked. So the good news here is that while these businesses may have over-ordered way too many things, all of those things, in my opinion, are going to disappear. Now, I don't know exactly how much they over-ordered, but it could give them enough time to figure out consumer trends in the future and actually order the right things that people want to buy in the first place. That was one of the biggest problems with the pandemic was you didn't really know what the equilibrium in the market was. Obviously, we had a supply and demand problem with a lot of different things. Like, do you remember the toilet paper pandemonium of 2020? Well, that was a supply and demand problem. People were afraid that they weren't going to be able to purchase toilet paper, so they went to the store and bought as much as they could. Businesses couldn't produce enough though, so there was a big demand, but not enough supply. That led to prices going up and Americans just not having enough. So how do businesses cope? Well, they have to look at their trends. They have to look at what is currently being bought and at what rate. They have to assume that that rate is going to continue, and if it doesn't, then they have an excess of supply, and now they need to get rid of it, which is why you see these big sales. So a lot of these retailers ended up ordering way too much because they were trying to keep up with what demand was, but demand has changed over the last 6 months. A lot of these orders, though, were placed months ago. Because supply chains are really restricted right now, you've got to get those orders in right now, or else you're not going to be able to supply anything to your consumers. Now, what this could ultimately lead to is stagflation being delayed in our economy or stagflation completely taking over. It's really going to depend on what businesses do here. Like I said, I'm not sure how much businesses ordered, but if they manage to order all of the right things come the fall or end of summer 2022, then they might be able to recoup some of those losses and get consumers back into their stores so they could start buying things or having them order online. What I will say is this hurts stores like Target a lot more than it hurts stores like Walmart. Walmart has, for the most part, a really big product section, but it also has a really big grocery section. Americans are going to Walmart still and shopping because of that grocery, but while Target does have some groceries, it's not as robust as Walmart. And not every Target store has that grocery section yet, so they're not going to be able to recoup those losses as quickly as a Walmart. Other stores that have consumer products like this are also going to suffer, which is going to hurt them in the short term, especially the ones that don't have really strong sales models and haven't really made a profit over the last few years. Those are the businesses that either might have to downsize, go into layoff territory, or just file for bankruptcy. Stagflation is not something that you want in your economy because it prevents growth. There is really nothing that the United States federal government or the Federal Reserve can do to prevent this stagflation. I mean, the United States federal government is doing what it can to improve our supply chain and get more things on the shelves and incentivizing businesses to produce more, but there's not really much that they can do otherwise. I mean, they don't have that much control over the private industry, and more importantly, they don't have control over what happens overseas. Again, if all of those issues overseas, like China ends its lockdowns and the war between Russia and Ukraine ends, well, that could mean a lot of ending to human suffering, but it also could mean a lot of economic prosperity for all nations throughout the world. That is only going to help our stagflation problem, not make it worse. The fact of the matter is, though, we don't know how long that's going to go on for, and the Federal Reserve right now is restricting our economy by raising interest rates, although we haven't really seen that have too much of an effect on people just yet. The only thing that we've really seen is the effect on the stock market and the housing market, but consumers are still willing to spend right now, and that is a really good sign. That is not going to last forever, though, so businesses need to do what they can right now in order to increase those sales. If they can make more sales, then people can make more money and we can have some type of GDP growth in Q2 2022. Otherwise, if they continue to order too much of the wrong things, then yeah, we're probably going to run into stagflation in the United States and we might run into a global recession. Things are hitting the United States really hard right now, but other countries have it even worse. Some governments are actually defaulting. Other countries have their currency being devalued even more than the US dollar, and other countries are not seeing as much goods and services because the US needs a lot too, and we are ordering way too much and we are willing to pay, something that other countries aren't willing to do, or they might just not have the money to do. What ended up happening in the late 70s and early 80s to kind of get rid of this stagflation and inflation problem and get our economy back on track was the Federal Reserve instituted such harsh interest rate policies and had no economic stimulus stimulus for our economy. That basically reset our entire economy because Americans couldn't spend any money. That allowed all of the issues across the world and here at home to eventually get resolved. And in the meantime, businesses improved their inventory. As they did that, well, Americans had all of this money saved up or all of this money from switching jobs, and then they went out and spent, and that created an economic period of prosperity in the mid to late 1980s. Obviously, then we ran into more inflation problems, but you get the picture. A similar situation is probably what's going to happen in 2022 and beyond if businesses don't take the right steps right now. Americans just won't have enough money to buy the things that they need or want, and the products on the shelves just won't be things that they want either. Not only that, but businesses aren't going to be able to order things, so that only makes our supply chain issues worse and makes it so Americans just physically cannot purchase things, bringing demand all the way down and our economy back to saving. But our economy and world economy is not going into a recession just yet. And it's really going to depend on what happens in Q2 2022 that will show us if we're going into a global recession or not. But now I want to hear from you on this issue. What do you think about the World Bank saying that the entire planet is about to plunge into a global recession? Do you think that there are ways that we can avoid this, or do you think it's inevitable? We are going into a massive recession in 2022, and there's nothing that consumers or governments or businesses can do about it. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.